Hi, this is Nick Katko. Yes, I just realized I didn't unmute myself. Thank you. Welcome to today's webinar on calculating and measuring value stream capacity. Before we get started, just let me know, can you see me? Can you hear me? Can you see the presentation? If you could just answer in the question pane. All right, great. All right, thank you very much. All right, so you may notice if you've attended my webinars a little personal note here. If you've attended my webinars in the past, you've seen a different background than this. I am actually presenting this webinar from London, England, where we are visiting that little guy in the middle who was born 3 weeks ago. So we're here for a few weeks to get to know our grandson. So that's why things are a little different. So I thought I'd just share that with you. All righty. If you would like to get a copy of today's presentation, you can download it in the handout section of your control panel. If by some chance you forget to do that, or if you're watching a recording of this webinar, send me an email. I'll be glad to send you a copy of the presentation. And if you have any questions, please put them into the question section of your control panel. I'm going to try to look at the questions while we're doing the attendance checks and possibly spend a little time answering questions as we go rather than doing them all at the end. If you are a certified public accountant in the United States and you would like to receive 1 hour of continuing education credit, you have to attend the live session for 50 minutes, respond to the 3 attendance check questions, and after that, send me an email. Let me know that you would like to get a continuing education certificate. I'll be glad to send it to you. And anyone else, if you'd like to just get a certificate of attendance, I'd be glad to send that along also. Hold on one second. I'm trying to find my mouse, my little. All right. So let's get going on capacity. So the purpose of this capacity is, this webinar is to hopefully take some takeaways from this. One is, in lean companies and in lean accounting, being able to explain why measuring capacity is important. The steps to calculate capacity. I am actually going to show you 2 examples of how to calculate capacity. It's really just a bunch of number crunching. Explain the different methods to calculate capacity. There's not just one way to do it. There's 2 ways to do it, typically based on whether you're looking at more of a manufacturing company versus a service company or an administrative process. And what are understand the financial benefits of measuring capacity. So let's start off sort of laying some foundational concepts about capacity as it relates to lean thinking. The economics of lean, which again, I talk about a lot in webinars and other training sessions. How does lean work financially? Well, you have continuous improvement going on in a lean company. The primary outcome of eliminating waste is creating capacity, or another way to say that is you're creating time. Just think about that. You have these wasteful activities going on in the business, and excuse me, and we reduce them, we eliminate them. Now all of a sudden there's more time for the people, there's more time for the machines, and it's great. But just that elimination of waste and creating time, there may be, you'll see, there may be some financial impact on that, but really the financial leverage of lean and how a lot of companies achieve tremendous amount of success with lean is the applicate, whether it's done consciously or unconsciously, it's the application and use of all that capacity you're creating. What can you do? You can create capacity and serve your customers better, deliver value. There's going to be a financial impact of serving customers better. Most of it's going to be top line sales growth. You can also use this capacity that has been created to achieve cost reduction over time. For example, if you're on a continuous improvement path and an employee retires, well, you may not have to replace that employee because you have created enough capacity where that employee's work can be sort of absorbed by other employees. And understanding capacity is what drives sustainable financial success with lean companies. And this is something new. In terms of numbers in companies, measuring capacity is new and different. Okay, I'm not saying companies don't do it the way I'm going to teach you, but there's a lot of traditional ways to look at capacity. For example, just the total amount of resources we have. Now, yes, that is a level of measuring capacity, but the difference between total resources or total time is the breakdown of how that time is being used. Capacity, understanding capacity creates value in decision making. So here we have an example of a few continuous improvement events that are improving delivery. On-time shipments have gone up. Quality, first time through, has increased. Dock-to-dock days, inventory flow, material flow has gone down. A lot of great benefits there. No one would disagree with it. But when you look at simply the financial impact, you see the direct financial impact of those events is only a slight reduction in the material costs. Why is that? We have better quality, so we have less scrap, so we're buying less material. We have better material flow, so we're buying less material. Now, all this is good. But what really makes the impact of these improvements stand out is that the amount of available capacity has just about doubled for both employees and machines. And just to continue with this example for one more slide, how you apply that capacity, the economics of lean, drives the total financial impact of continuous improvement. So in this case, the company was able to, in this value stream, they were able to increase sales and use that capacity, serve customers better. And you can see that sales went up almost $100,000. The material costs went up, of course, because they're variable. The conversion costs, which are the production costs, stayed flat. And you can see that the value stream profit went from 31% of sales before the improvement events to 40%. So this is really how lean works financially. But if you're going to want to understand capacity, it's best to measure it. Because people may not understand lean thinking, they may not understand specific improvement events, but they understand numbers moving in the right direction. And to go from 51% productive capacity to 60%, okay, that's good. To go from 19% to go from 30% non-productive to 24, that's good also. The next sort of foundational piece to understand is the lean thinking view of business process activities, because this is sort of foundational to the way we calculate capacity. Any business process activity, whether it's an entire process step or maybe the tasks within a specific process step, can be classified as one of three ways. It could be a value-added activity. These are the required necessary activities to produce a quality product or deliver a quality service for a customer. Another way to think about value-added activities is that if you don't perform the activity, you don't deliver the product, you don't deliver the service, or the quality will suffer. The second type of activity, you hear about value-added, non-value-added, but it's always best to break non-value-added down into first what we call necessary activities. So these are activities that don't create value, but must be performed for some business reason. So in manufacturing, purchasing is a necessary activity, okay? It doesn't create any value, but it has to be performed inside the business. Accounting is a necessary activity. And within the necessary activities, you may have waste. So you also have non-value added and unnecessary activities. This is pure waste. Defects, overproduction, waiting time, transportation, inventory, motion, excess processing. So these activities are pure waste. They consume resource, time, and effort, and you can eliminate them with no impact on any necessary activity and no impact on the value-added activities. And what's interesting here and important, especially in an administrative function or maybe a service function, is that a lot of the work that is being done is non-value added but necessary. But the people doing the work think, they're value added. Okay, and it's really important to be able to distinguish that, and that's a learning process. Okay, but it can be done. So understanding these activities, what we do is, hold on. We calculate capacity based on the activities. So productive capacity is the value-added activity time of a process or a value stream. Non-productive capacity is the non-value-added but necessary time and the waste time. Then available capacity is the time created through the reduction in non-productive time. So let me open up the polling question. We're going to do attendance check 1. I'm going to launch the poll. I'll give you about 30 seconds to complete it. While you're doing that, I'm going to see if there are any questions. Oh, thanks for all the congratulations. All right, I'm going to close the poll. Not going to share the results. Hold on. Hide results. And we're back to the presentation. All right, so let's talk about how do you actually calculate capacity. This is the primary reason for this webinar. Capacity, the initial calculation of capacity and updating capacity is a data collection effort. All right. You want to, and you can do this one of two ways, and I'm going to show you both. One is you can do it by the process step activities. This is best for like a manufacturing value stream. Okay, that has tangible products that are produced. The steps in the production process are very sequential. They can't be done out of order. And so this is the easiest way we found to calculate capacity in this manner. You can also do it by sort of the position of the employee. So this would be best for processes that deliver services or an administrative function. The reason that we recommend this approach is because in an administrative function or in a service business, there is a specific sequence. There's a sequence of activities which may be performed, but given the interaction with the customers, they may be performed in a little different manner, but they eventually get done. What's your sort of span of looking at data collection? Well, you can look at all the steps in the process. So you can look at every step in a value stream, for example, or you can do just the bottleneck process. For those of you who are unfamiliar with a bottleneck process, that's the process step that takes the longest has the longest processing time or the longest cycle time. The reason you can do the bottleneck process step is because that controls the rate of flow for the entire value stream or process. So you have some choices there. And I've seen companies do it both ways. The time frame. Calculating capacity is very much just what is the average capacity over, for example, a typical month. Okay, this is not a time study. I'm sorry, there are elements of doing a time study, but this is not a continuous time study. We don't want to track people, we don't want to track time. So we're just trying to get like a snapshot of what's the average capacity over a typical month. And then periodically, because of improvements, we will update that. So the steps to calculate capacity, quite simple. Calculate the total available time. That's based on the resources and the number of days and hours that they work. Okay, a lot of times I get asked by a company like a manufacturing company that maybe only runs one shift. They said, should we calculate total available time based on 3 shifts? And the answer is no, because you don't usually have a second shift or a third shift. Likewise, the resources. You want to focus on the resource that performs the value-added work. So, in administrative functions, that's going to be people. In service business, it's going to be people. In manufacturing, it could be people or machines, depending on what the process is. But, and the way to focus on it is what resource, people or machines or equipment, is doing the value-added work. Calculate the total value added time. Okay, this is how much time that we are actually spending creating value for customers. Then you calculate the non-value added but necessary time. Calculate then the waste time. Okay. Data collection, observe the process. Now, if you have good value stream maps, with data boxes or that process maps with data boxes, those are usually sufficient in terms of the observation. Now, if you have sort of just we just know the process steps, but we don't know the timings, you want to observe the process. Here's one very uh, strong recommendation. Don't just ask the people who do the work what they think. How long does it take you to do this? How long does it take you to do that? There you'll get all kinds of answers. A lot of times the answer might be, well, it depends. Um, but you want to sort of just observe, okay? How long do you have to observe? Oh, 30 observations are good. So, for example, if you're doing any process that's high volume, 30 observations doesn't take long. So you sort of have to balance it, okay? You don't necessarily have to observe the process for 30 days. Now, I said don't ask the people. I said I recommend observing, but in some cases, especially in an administrative function where maybe the work is being done on a computer, it's really hard to sit there and observe. So you may create a data collection sheet where the people doing the work can write down their timings, and then you can sit down and review it with them. And this can be done in Excel to get the averages. So there's different ways to do it. I've used both of those, the direct observation and also collecting the time. So, whatever works for you, whatever is practical and logical, that's really what you want to do. So let's start looking, let's look at these two examples. So the first one is going to be calculating capacity by position activities, and we're going to use a healthcare example. And so what we have is we have a team of nurses that work in an inpatient wing of a small hospital. Okay. So first step, what's the total available time? So in this case, we were looking, there's 4 nurses on duty, 8 hours a day. Now they have multiple shifts, okay? But we decided we were only going to look at the first shift, okay? Because again, the tasks and the activities are very similar. So so we have 4 nurses, they work an 8-hour shift. And this team, there's always, there's always 4 nurses on duty every day of the month. Total available time, 57,600 minutes. Oh, I failed to say this. I'll say it now. Usually you do this in minutes. That's the time denominator. You can do it in seconds. That would be something in maybe in manufacturing where the cycle times for products are very, very short. Seconds might be better than minutes. Again, you have to sort of figure this out based on what you're measuring. The second step, calculate productive capacity. All right, so that's the value added time. So in the observation process, there were 3 activities which were determined to be value added. The nurses doing their rounds or check-ins with patients, actually treating the patient, and updating the patient's medical records. So you can see, those are the activities. We see the quantity. This is how many times these activities occurred during the month, and approximately, what was the average cycle time to complete it. Total value added time, 20,250 minutes. Total available time, 57,600. Divide the available time into the value added time, and you get productive capacity of 35%. The next step, the non-productive but necessary capacity. So in the data observation, there were 4 activities determined to be necessary, that they had to be performed, but they did not directly impact the plan of care of the patient. So there was the intake of the new patients, there was the rooming of the new patients. Each of those occurred 150 times during the month, 30-second cycle time. There was discharging patients, 125 times a month during the month, about 60 minutes. And then there was coding, which was updating their sort of healthcare system, not for medical records, but for billing purposes. And that took 50 minutes. The total necessary time, 18,750 minutes. That leaves the total available time. Then you divide the total available time into that, and the necessary capacity is 33%. The 4th step is to calculate the waste time. So 4 activities were determined to be non-value added and unnecessary, or non-productive and unnecessary. Searching for supplies, which occurred 360 times and took 15 minutes. Messages, phone calls, and meetings. You can see all the data there. And when you divide the total non-productive time into the total available time, you get 21%. Then from there, you can calculate the available capacity. You can do it by minutes and percentages. You saw on the example, the box score example, that we use the percentages. So what this reveals in this particular example is that the nurses spend they spend about 54% of their time on necessary and non-productive activities. And so measuring capacity also reveals opportunities for improvement. Being able to reduce that non-productive capacity frees up more time for patient care. And even maybe looking at the necessary capacity. For example, there was a discharge, which took 60 minutes. Well, if you study that discharge process, you will probably find waste inside that process. And maybe you can reduce it down from 60 minutes down to 30 minutes. We actually did that kind of work in a hospital, and the discharge process was full of waiting time because there were certain forms that had to be completed and certain approvals that had to be done. And it was just waiting on getting all that done because the people that had to do the approvals were busy doing other things. All right, so let's do attendance check 2. All right, I'll give you a few more seconds. All right, I'm going to close the poll. I am move that. All right, results. Okay. Great. Get my screen cleared off. And I checked, no specific questions right now. That's fine. So we'll continue with the presentation. All right. So the other way, the other method that you can calculate capacity is by process step. Now, like, oh, let me see, there's somebody, sorry, little technical difficulty there. So typically this is done in manufacturing. You really could do it in any process that has a specific sequence of steps which have to be completed in a particular manner. You can't skip the steps. You can't go from this to this. You got to go sequentially, and you get a certain kind of output. But manufacturing is the best example. So again, it's very similar. Now, here, what we're doing, we're just going to calculate the capacity for a bottleneck process in manufacturing. That is, and again, remember, you have to decide on the resource, people or machines. And in this case, the bottleneck was this process step is people. Like I said, you can show you can do the entire value stream if you want. And I've seen companies do it both ways. So what we have is we have 15 people that work in this process step. They work 20 days a month. They work 1 8-hour shift, and they get 60 minutes for breaks and lunch. And that totals 126,000 minutes a month. Second step is calculating productive time. Now, in manufacturing, the productive time is the cycle time, the actual cycle time to produce the product, to build the product in that particular step. That information is very well known in a manufacturing setting. Like I said earlier, if you have value stream maps, it's typically on the value stream map. Now, it's going to be based on the units shipped, not the units produced. Okay, if the units produced greater than the units shipped, that's overproduction waste, which we will calculate in a little while. So 4,875 units shipped, cycle time is 10, productive capacity 48,750. Now, many times I'll get asked the question, well, we have a lot of products that go through the value stream, and how, what should we do? Well, can you do an average cycle time? That's one thing. Can you do the 80-20 rule, where 20% of the products represent 80% of the volume through the value stream and maybe get an average that way? Or could you pick maybe just one product that is very representative of all the products that flow through the value stream and use that cycle time? So what's important to understand here is, we want to get a good average that we can consistent, and then we want to be able to calculate it in a consistent manner. We don't want this to become a very burdensome exercise where, you have lots of resources dedicating to trying to keep all this up. Third step is calculating the non-productive and unnecessary time. So in this process step, there was changeover time. That the batch size was 500, changeover time was 60 minutes on average. There was scrap and rework of 20%. There was also quality inspection. 30% of the items were inspected, and 5 minutes per inspection. Downtime was 20%. And so, you calculate each of these, you basically convert the data that you see on the left into minutes. So a batch size of 500, total parts made, that is the good product and the scrap, okay? And it takes, so there's 12 and a half changeovers. Each changeover takes 60 minutes. So over the course of an average month, 750 minutes are spent on changeover time. You know, overproduction, we got that from the last slide, 125 units, 1,250 minutes of overproduction. The scrap is 12,500 minutes. The inspection time is 9,375 minutes. And the downtime is 25,200 minutes. What I like about calculating capacity like this, you know, you talk about the waste, changeover time and scrap or inspection or downtime, but you're converting all these forms of waste into the common denominator measurement of time. You know, we spend 25,200 minutes a month on changeover, or I'm sorry, on downtime. That's a lot of time. We spend 12,500 minutes on scrap and rework. And it really, it also reveals potential opportunities for improvement. So, you know, if you looked at this, you know, you would probably try to focus your improvement on reducing downtime and reducing scrap because they consume the most amount of resource time. You know, changeover, well, yeah, you can make improvements on changeover, but you know, what's the best you're going to get? Okay, you know, go from 750 minutes down to 500 minutes. You know, it's what I call sort of the continuous improvement return on effort. You know, if we make this improvement, what is the benefit of the improvement? And that's what capacity helps you determine. The fourth step is calculating the non-productive but necessary time. So these are activities which must be performed for business reasons. They don't create any value, but they have to be performed. And in a lean manufacturing operation, three activities were identified. One was 5S time. So we have 15 people, they spend 10 minutes a day on 5S. There's a daily huddle. All 15 people attend this 10-minute daily huddle. Each of those consumes 3,000 minutes a month. This company decided to measure continuous improvement time because continuous improvement was well established in the company. So they wanted to understand, and they didn't want to sort of penalize anybody for spending time on continuous improvement. So on average, 8 hours per person per month. So you can see there's your non-productive time. Now, excuse me, we can calculate the available capacity. So we have the total time of 126,000 minutes. 39% of that is productive. 44% is non-productive. And you know, you could split that up between non-productive unnecessary and non-productive necessary. And continuous improvement time is 6%. Available capacity is 12%. It's not unusual to see this. Most of the time, the non-productive capacity is greater than the productive capacity. Now, you know, people may get discouraged about this, but from a lean thinking point of view, this represents an opportunity to improve and to eliminate that non-productive time and create more available capacity. So let's do attendance check number 3. All right, close that poll. All right. Okay. So I'm going to wrap up, but actually what I want to do, we have a little bit extra time and I want to show you something. Okay. So I am going to, um, I need to open up. Okay. So what I wanted to show you is something that I'm going to be talking about in a minute, are some Excel templates. Okay. So, what you saw, you'll recognize sort of the format that, here's all the information in the template. Now, this one has 3 process steps. You can add more process steps if you want by simply inserting rows. You don't want to change the total column, okay? And I'm going to show you how these templates are available if you're interested in them. So it's just a matter of entering the information. So here's an example of a completed template with 3 process steps. And just sort of to give you a little background, if you're looking at a manufacturing process, you have to understand the component parts and how many component parts go into the finished product. So what do you learn? You can learn that, there's available capacity here. There's not any available capacity in the anodizing and assembly step. You can also, now the nursing example we gave you, I didn't want to show you all this on the slide, but this is another template, and this is done for service businesses where you're looking at like the position. And so this is actually the same example that I gave you earlier about the 4 nurses. We have 4 nurses, 8 hours a day, 30 days a month, and what you do on this template, you put in the quantity per month and the cycle time, and then down here, you identify the activity as productive, non-productive, or necessary, and then the spreadsheet will do all the calculations for you. And again, you can do as many positions as you like and get a total for a value stream. This is most effective, for example, healthcare, accounting processes, any kind of service process. So I just wanted to show you those things, and we'll get back to the presentation. Just want to see if there's any questions. Okay, yeah, okay. Jared has a good point. Oftentimes, service companies don't have value stream maps completed. He wanted to know, what have I found to be most useful for service companies to collect the times? What it depends on sort of how the employees work. If it was a service with a lot of interaction with a customer, like say at a bank or something like that, you may want to have somebody observing, okay, because the employee is interacting with the customer. But if it's more of an administrative task, like an accounting process or something like that, where people are working at the computer, you could create a simple Excel template, which just, they can write their times down based on the activities that they're doing. If you sit down with the team and ask them to do this, and you sort of keep it pretty simple, you know, they usually do a pretty good job. And what's really important there is, if people are tracking their time on paper, is to review it almost on a daily basis, just to see if they're, because sometimes they have questions. You don't want to sort of let them do it for a week and then start looking at it. So you just do it once a week, and sometimes you have to, they learn as they go about it, but I've found that it typically works. Okay, thanks for that question. All right, so a little bit of wrap up. You know, which method should you use? Okay, use the process step method when the value-added activities must be performed in specified sequence, such as when a product is produced, sort of manufacturing. There might be some other examples. I know, like a laboratory, a testing laboratory has that same, has the same characteristics. The position activities, you know, when the exact sequence of the value-added activities can vary. So it's typically in service, or some level of intangible product is delivered, healthcare, accounting, any administrative function. Okay, because for example, in accounts payable, you know, I might, you know, I know how to process the invoice and what the steps are, but I might be processing an invoice and the phone rings and it could be a supplier that has a problem. So, you know, I can't tell the supplier, oh, sorry, I'll call you back, I'm busy processing an invoice. I have to deal with the supplier right then and there, then get back to the invoice. So that's sort of a simple example of how the sequence can vary, but they all eventually get done. How often should you recalculate capacity? All right, you calculate a current state. So it's the average capacity percentages based on normal operations. Okay. Now, if you have any kind of seasonality in your business, you're going to have to take this into account. But what's the average? Okay. And that's your initial calculation, called the current state. When do you sort of adjust it? It's really based on the rate of continuous improvement in business activities. Okay. If you're sort of a more mature lean company and there's regular improvement activities going on, you may want to update it quarterly or monthly. Okay, because what you're doing is you want to create, you're trying to create a new current state. Okay, especially if that waste is being eliminated. If continuous improvement is, you know, not that robust yet, you know, you might go quarterly or maybe semi-annually. It doesn't take much to do the recalculation. The effort is in establishing the numbers, and then it's just a matter of updating the numbers. The financial benefits of measuring capacity. Continuous improvement. You with capacity numbers, you can measure the direct impact of continuous improvement, which, as I said at the beginning of this webinar, is primarily eliminating waste, create more time. You can then also understand the complete financial impact of using that capacity, because we've created capacity, what are we going to do with it? And that has a financial impact of either increasing sales and or reducing cost. Every company wants to control costs. And you know, you drive cost reduction over time by having a better understanding of capacity. For example, you know, when I was a CFO at Bullard in the 1990s, and we applied lean thinking in the accounting function. Over the course of about 5 years, we reduced the accounting staff. We didn't fire anybody, but people left. A couple people took different positions inside the company. A couple people took different positions outside the company. And throughout all that, we were able to not replace them. So, and this is at a time when the business was growing and the transactions were growing. So it is possible to, when you understand that available capacity, it's possible to avoid future cost increases. Profitability. The understanding the actual profitability of decisions, and also maybe like doing forecasts. For example, if you have an opportunity to take an order from a customer, or maybe there's an increase in demand across the board, and you have available capacity to handle that additional volume, well, the contribution margin of that is going to be the profit. Sales less the variable cost is contribution margin. That contribution margin is how much you will make on that incremental business because you're not adding any costs. Also, in terms of when to hire people or when to buy new equipment, really the operational reason, well, besides a machine getting worn out or at the end of its useful life, but hire more people. Well, the reason to hire more people is you're out of capacity and there's demand, and the capacity calculation shows all that. So what I showed you, those two templates we've created and are now available for purchase, both the process step template and the position activity template. Okay, and there's the link to get the templates. They're Excel templates. Everybody knows how to use Excel. You get both templates for $14.99, and that also includes a free hour of working with me. If you have questions on understanding it or setting up, I'll be glad to help you do that. So that's something new that we just put on the website actually yesterday. And here's more information about learning opportunities. Obviously, the BMA website. We have a community chat, which is on Thursdays, the same week of the webinar. So there's going to be a community chat on Thursday. Registration is free. We have webinars scheduled for April and May on value stream management. And fairly soon we'll add more webinars for the upcoming months. So that wraps things up. I'm trying to find my mouse. There's a few questions. So let's see. So Casper Stevens. Okay, he had a couple. Let me start from the beginning. So Casper, one question you had is how much overhead do you add to the cost of salary? So I assume you're talking about sort of like benefits. Some companies are able to specifically identify benefits by employee. Other companies, for whatever reason, they sort of understand what's the total benefits compared to the total salary, what's the percentage, and then they sort of just assign benefits based on a set percentage based on the salaries. I hope that answered the question. And you also had another one. When do you go for calculating time versus dollars or euros? You use the time calculation for capacity. When you're doing a value stream income statement, obviously you want that to be in your currency. When you're doing performance measures, most performance measures are some kind of rate, not necessarily all. It could be on-time delivery percentage, for example. Some measures like cost as a percentage of sales, things like that. I hope that answers your questions. And for some reason, if not, be glad to talk to you via email, or maybe we can do a call. And Mr. Doolin, I assume, he had some questions about mainly about standard costing and lean costing and lean pricing. Oh, since we're almost out of time, what I would suggest is that if you wanted to talk about this, let's talk about it somehow. Set up a Zoom meeting or something to talk about it, because your questions are very good. It takes a while to explain all this. I'm going to see if there's any more questions. Again, if you have any questions subsequent, please let me know. If you purchase the spreadsheets, please make sure to contact me for any questions that you may have. They're very useful, and people that are involved in continuous improvement really like the spreadsheets, because it allows them to quantify the impact of improvements, which sometimes they have a hard time doing. But when they see the spreadsheets, it's sort of very logical to them. So if you're not directly involved in continuous improvement, maybe let your continuous improvement leaders learn a little bit more about the spreadsheets. So I thank you very much for attending, and hope to see you at our next event in May, and maybe on the community chat this coming Thursday. So all of you have a good day, good evening, and hope to see you soon. Bye.